Hello, everybody. It has been a little while since we've brought you some incredibly useful, valuable content, but we're back. It's myself, Mark Jones, and
Deborah Criddle. And I'm so glad to be back because the last month I've been renovating a house and you've been holding down the fort at your office with some... That's appropriate. Isn't that Mario?
yes.
That's awesome. Should have just let it go. That was appropriate because you were holding down the fort in your chaos over there and it would have been Mario dying. Does he die?
Yes. No, that's at the end of the level where you beat the game or you beat the level and you jump up and grab the flag.
That would have been perfect because you were holding down the fort at your office and it would have been you successfully meeting your sad and you shut it off.
I'll totally keep it in there. That's funny. But you were telling us we've got you, myself, putting out fires, doing renovations, everything under the sun, and still doing loans.
Yeah. I packed up my office and went down to St. George with my son and we gutted a house. But let me tell you, when you can take a sledgehammer to a wall after a stressful day in the mortgage world, it's like peace. You don't need yoga. Give me a sledgehammer.
That's
So
awesome. That's probably a cool practice that I should maybe adopt. I just need to find a wall now.
oh, you can, just take one out. I mean,
we'll find a wall to knock down. That's awesome.
Yeah.
So with everything going on in the real estate world, these borrowers are seeing on social media, YouTube, the news about real estate commissions being cut, things of that nature. And interest rates is always a topic of discussion or something that they advertise or market. And we haven't really seen any drop in interest rates like we had anticipated, essentially induced by Jerome Powell at the end of last year saying that we're going to have X amount of rate drops, et cetera. And unfortunately, we have not. So I found a cool article that kind of explains the reasons why to help, I guess, buyers, renters, understand what the future holds, maybe.
Yeah, there's always something, they've got everything tied to inflation and then something else, some report comes in and that's not going to help inflation and a bridge gets ripped down from a ship hitting it and that's going to change some exporting and importing and that's going to cause issues with inflation. So the end of the day, rates are what they are. Let's just buy a house.
It is true. And something funny about that bridge, our wonderful president mentioned in a conference or something, he said, we're going to make sure that we pay for this to get repaired, et cetera. And the whole time while he's talking, I'm going, wait a minute, isn't there insurance for stuff like this? Like, I hope my tax dollars don't go to pay for somebody's bridge in Baltimore.
It is going to go to that. Yeah.
Anywho, let's get to the article. That was a nice little. Let me get to this article here.
Go for it.
I found this article that I stumbled upon. It was on April 3rd when it was released, so not too long ago and very relevant, titled, "You Won't Get a 2% Mortgage Again, How to Adjust to a Different Housing Market."
I kind of wish there was parentheses that says, "and we don't want them."
Well, I mean, let's see what this article says, because you may be surprised. I, for one, don't always put a lot of faith in the media or anybody writing blogs like this, but who knows? We may be surprised. So only a major economic crisis would cause mortgage rates to drop to those levels again. Were the good old days really all that good? Sure, when mortgage rates were below 3%, it was a lot cheaper to purchase a house. But we were also in the middle of a global pandemic. At the start of 2021, the average rate for a 30-year fixed mortgage was 2.65%, according to data from Freddie Mac. 2.65. I mean, my rate on my mortgage is at 3%. So I was one of the beneficiaries of something like that. And I can imagine, did you buy anything during that time period?
No, and the only mortgage I have was
right.
my second home that I have down in St. George area, and it's in the 8s. But I was okay with that because appreciations and the financial gain of being a homeowner. So,
Oh yeah, definitely. Well, what I found is that homeowners that are already homeowners have no issues with the rates being high. And when I say don't have issues, I'm not saying they're not
as
happy
sensitive.
about it or correct. They understand that it's not about this rate. It's about building that equity. The idea is to kill the principal as fast as possible. And then you don't really pay all that much. In
Yeah.
addition to the concept of, well, rates are higher, so your budget has to apply to that payment that coincides with it. But at the end of the day, they've got that concept under wrap. You've got that. I've got that concept under wraps.
Yeah. Yeah. There's definitely this big misunderstanding that people don't want to be homeowners because the rates are so high. And that's right. But owning real estate's the long game. It's
Yes.
not the
Yes.
short game. And that's where a little bit of a misunderstanding comes in, is real estate is a long game.
Yeah.
And
And I have a favorite saying, and I don't remember who said it first, but it is, "Don't wait to buy real estate. Buy real estate and wait."
yeah, yes. You've posted that on social media, and I
Yeah.
don't know that I've heard that until you posted it. I really like that.
Well,
That's
you're welcome,
perfect.
ma'am. Aren't
Check
you
you
glad to
out, big
be
guy.
friend? Let's
Yeah.
continue this article here. Okay, so we've got during the home buying boom in 2020 and 2021, the number of borrowers taking out a new mortgage reached a more than 2-decade high. Over the past, excuse me, over the past 2 years, a combination of high mortgage rates, low housing inventory, and sluggish wage growth has crippled affordability for homebuyers. While many are holding out for mortgage rates to fall, it's unlikely we'll see 2% mortgage rates anytime soon. In fact, experts hope we don't.
There you go.
So
There
there
you
you go.
go.
What was funny in that is immediately when I said 2% rates, you immediately said, "I hope we don't." Hey, expert, how you doing?
Yeah. Yeah. Well, the basic economics for sure, it doesn't make sense. But yeah,
Let's
keep
see,
reading. This is
let's
very
see,
intriguing to
let's
me.
see what they say. A return to that kind of rate environment would indicate a major problem in the economy, said Alex Thomas, senior research analyst for John Burns Research and Consulting. Mortgage rates typically fall during a recession, but a recession also comes with a widespread unemployment, increased debt, investment losses, and overall financial instability. In today's housing market, home buyers should have realistic expectations. Experts predict mortgage rates to inch closer to 6% by the end of the year as inflation cools and the Federal Reserve starts to cut interest rates. Record low mortgage rates aren't in the cards again, and that's likely for the best. Mortgage
Good.
rates change daily, sometimes blah, 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 blah. We'll keep going. This is all advertisements. Okay, so how did mortgage rates drop to 3% in the first place? Let's find out.
Fake money, baby. Fake
Hey,
money.
economic uncertainty and the market volatility, whether during an election cycle or a pandemic, impact the direction of mortgage rates. It's often said that bad news for the economy is good news for mortgage rates, and vice versa. A significant lever for mortgage rates is the federal funds rate, which the Fed keeps low when it needs to stimulate the economic growth. For example, during the 2008 financial crisis, the Fed slashed that benchmark rate to 0 to bolster the economy. When there were signs of recovery in 2015, the central bank started to raise interest rates again, sending mortgage rates into the 4s to 5 range until 2020. The COVID-19 pandemic sparked another economic crisis. To incentivize people to borrow and spend money and avoid a prolonged recession, the Fed once again cut the federal funds rate to near 0 and pumped money into the economy by purchasing government bonds and mortgage-backed securities. Mortgage interest rates fell quickly, bottoming out to the mid-2 range in 2021. But the combination of supply shock, record low rates, and extreme increase in money supply from the government stimulus helped send prices way up. According to Aaron Skies, chief economist at Nestseeker International. In early 2022, the Fed had a new problem on its hands: inflation. Dun, dun, dun. That's a depiction of that. Okay, so that was a pretty good explanation, in my opinion, of why rates were so low. Let's see what it says about what caused mortgage rates to surge again. With prices surging in 2022, the Fed's main tool was adjusting interest rates, making credit more expensive and decentivizing borrowing. As a result of a string of aggressive rate hikes, the federal fund rates went from near zero to a range of 5.25% to 5.5%, where it remained since last summer. Average mortgage rates skyrocketed, peaking past 8% last October. Although inflation has gone down, the Fed isn't ready to start lowering rates just yet. The central bank would like to see evidence of a weaker economy, including consistently lower inflation and higher unemployment, before making any adjustments to the monetary policy. So what are your thoughts? Let's see. Why won't rates go back towards 2%? I think they kind of answered that in the
Yeah,
beginning.
they can't. Yeah, they just can't. The
Yeah.
economy can't handle that.
So let's
Well,
talk about this thing.
it's interesting. Time kind of just runs together really fast, but I remember first part of last year, the end of the year before that, it was rates are going to go down, rates are going to go down. And I said, yeah, the predictions are everybody's saying rates are going to go down, first part of 2023. The problem is nobody's saying what are they going to do to rates before they go down.
Mm-hmm.
They missed that. They assumed the rates were in the sixes and they were going to go down to the fives and the fours and all that. No. They hit the eights and then they came down.
Right.
So if you're locked at 7.5 to 8 and you're able to refinance to 6.5, you're a happy camper.
Yeah. Most definitely.
Everybody who's got this crap in their head about 2s, 3s, and 4s rates, they just
And I think that this article lays it out pretty well. I don't know if you can draw a picture for people to better understand the simple concept of supply and demand, excess, and inflation, deflation, recessions. The idea behind that is if rates were to come back down to the levels that they were at, which you've got folks out there screaming, I wish rates would come back down. Okay, but do you really understand if that happened, the amount that you're going to pay for the house that you wanted is also going to go up now because they work hand in hand.
Well, and along with that, there's no
Mhm.
more 5.5% CD rates.
Mm-hmm.
There's no more savings accounts, which make 0.000001.
Right.
I mean, the whole circle around that is the value of the dollar to the mortgage-backed rate or
Yep.
to the mortgage rate. All that stuff goes in a little bit of a circle, and you can't have this without that.
Mm-hmm.
And the big thing is everybody has to remember they were not realistically low.
Right.
They were fake low. So if you take it into, I walked into the grocery store and I bought every gallon of milk, the price is going to go up.
Correct. And why would that go up? I mean, I think finishing your statement off there would cap it off as to why.
Yeah. So there's no milk. That means it's going to cost more to get there.
Yes.
Okay. Well, if there's a whole bunch of milk, the rates or the price is going to go down. Well, it's the same concept with the interest rates.
Mm-hmm.
There's a lot of demand for interest rates, which was falsely put in there when the feds were tossing money in there. That's what brought those rates down.
That's
right. I remember, and I wish I would have screenshot it because it would have been totally cool to have this. But when the mortgage-backed securities were just going crazy, when all of those dips started happening, I pulled up our MBS highway, which is what we watch the mortgage-backed securities selling. And I put it on my TV. I have a TV in my office that we usually kick on cartoons for kids that come into the office so that they can just relax.
You watch cartoons all day long.
Friends. I watch Friends all day long. When I'm stressed, I have Friends on. Okay. Yeah. Friends. Anyways,
they go,
yes.
I'm
You're
kind
my
of
guy.
a Friends nerd too.
Oh, that is the best. Anyways, I had that up and there was 137 basis points in one day. And I'm just like,
yeah.
Stay focused, Mark.
Sorry.
Stay focused. Anyways, it was those mortgage-backed securities hit above 100 and I'm like, holy cow. And rates are just dropping a quarter and 3/8 and 7/8. And that, that is, that is stressful.
Yeah.
That
No.
is stressful. And all you're doing is just shielding phone calls of what's your rate? What's your rate? What's your rate? Cause you know that this guy that just locked it 4.5, they just dropped to 4. So he's trying to jump ship from one lender to this. And
Yep.
that was so hard. And it was good because it was a little bit of a boost. The hardest part that I think that came from that is there was so much money moving around
Mm-hmm.
that increased the market higher than the economy can handle in the market that it's in.
Oh, I
Like,
agree 100%.
mine is so bad.
Um,
We have no affordable housing here.
yeah,
None.
to that point, I stumbled across something else that we can actually share and discuss in this same topic. Let me look it up. Corporate.
Okay, while you're looking that up, I'll just continue to say
Yeah,
one thing
please,
that was just
please.
in my mind. The big thing right now is the crash that everybody wants to have happen. Well, no, I can't say everybody. A lot of people want the crash to happen so they
Right.
can pick up a good deal.
Yeah,
Okay,
most definitely.
fine. Let's say that there is a little bit of a crash. Let's say that things do decline just a little bit. And you could get some awesome something deal because you got 10, 20, $30,000 off of a house. How much rent did you pay in that time frame? How much, I mean, there's just like all these other little things that have to factor into it, that
So true.
rent is 100% interest. That
Yeah.
is one of the favorite things I've seen on social media, and I never have really thought about that, so I have to give credit to whoever it is that first posted that, but rent is 100% interest. So stop complaining about 6.5 and 7.
No, you're absolutely accurate on that, and not enough people talk about it. And you're right. So I've got this on the screen here, and it was something that I stumbled across. So it's from Fred Economic Data, which they're very reputable. And what this is showing, and we just had a conversation about inflation being too high. It's coming down, totally understand, but milk is still higher, eggs still higher, et cetera, et cetera. But there was an article that I stumbled upon that said 53% of the inflation that's taking place over the last several years is due to corporate profits. It's not actually like because it costs us more to get this, we have to pass that cost along. No, they're just raising stuff and it's still going up. Funny thing about this is if you notice when it starts to rise, so this is pandemic, I would imagine, boom, drops to the
Yep.
ground. We change presidents right around what, November? Boom.
They actually go in January, but yeah, somewhere
Yeah.
around there, we know
Well,
who's
there you
coming,
go.
so yeah.
There's January. Pew, and still cruising upwards. Is that not odd to you? Let me
That's sad.
shrink it. I'm going to shrink this down from 2020 to now. That should do it. There you go. So, a pretty steady increase in the corporate taxes, I'm sorry, corporate profits that you go, wait a minute. I thought that we were in a crisis, number one. I thought that we didn't have any money, so we're stimulating the economy. I thought that, wait a minute, behind the scenes, it's just you guys making more money?
Yeah.
Whoa.
Somebody's making money.
Yeah. I mean, that was super shocking to me. So, anywho,
But what can be done about it?
I mean, the only way to stop it, which I don't believe is going to happen, is for Americans as a whole movement say, I'm not buying any more, excuse my language, shit anymore. I'm not going out to eat. I'm not buying the new iPhone. I'm not getting new clothes. That TV, don't need it. That's what essentially needs to happen because just like we discussed, supply and demand. If we demand less, there's going to be an excess of supply. Hence, them having to go, okay, maybe we should drop our margins back down because the people have spoken.
Yeah. Yeah, you're 100% right there that it's gonna take all of us, but the problem is that'll never happen, and we
Nope.
have so much corporate greed in this world. It's so sad because I survive just fine. I thankfully have the ability to grow a garden and, have my own beef and some of those things,
Sure.
which is super, super expensive.
Yep.
And so, I'm blessed that way. But I look at the people who are on these fixed incomes that their houses are paid for.
Yeah.
They only have their little measly taxes. They really are fine financially until a gallon of milk is 5 and 6 and $7 and they're used to 2 and 3.
That's so true.
And that's the sad part is, okay, maybe the middle people are okay. Maybe the middle to the upper people are okay. But the little guys that have 88-year-old grandmas that they're not okay.
You're right. And another little nugget of truth for folks listening to digest is the concept of the economy's doing great right now because look at our stock market. Well, your 401k is doing great, but truly, how much do you have in it? The people that are doing great is the top corporate tax brackets, essentially. So yeah, that's doing great, but the little guys, the mid guys, not so much. Why? Because
Yeah.
they don't have as much assets, ownership in the actual stock market. So it's being inflated and extracted before I don't know, who knows, maybe the next president change, I don't know, but
Yeah, who knows? Who knows? It's the whole thing about it is, if you're in a financial position that you couldn't buy a house and you're just scared of the crash coming, and so you're waiting for the right time, or you think rates are gonna come down, not a good idea. Not a good idea. I
yeah,
just don't think I think we've got such a big issue with our economy right now that if we hold 5.5 to 6.5 rates, that's where it just needs to hover. It needs to stay there. If you now, I am not an economist at all. Like, I have a degree of school of hard knocks,
same.
and
It's logic.
there
I mean, you
it's
and I operate on very sophisticated logic in my
yeah, yeah, and I just remember when our market was what I interpreted pretty strong
mhm,
was when the mortgage rates were in the 6s.
yeah,
And if you really look at what was going on pre-craziness in 2008, that's a whole nother subject. But
mhm,
when you look at what the rates were, what the minimum wage was, what the cost of living was, and all of those things as a whole, the economy was okay in the 6s. They just need to chill and just let it sit in the upper 5s, low 6s, and just let everything just kind of settle.
yeah.
Get the corporate greed down just a little bit so that people can actually survive
I mean,
and
and
we'll
you
be
look
okay.
at what could be the cause of this bigger cause. I don't want to be a conspiracy theorist, but if you look at the breadcrumbs and you go, okay, consumers, normal Americans are not purchasing at the rate that they should be or could be, given the wrapping the head around, okay, I need to buy a little bit lower because the rates are higher, so the payment's higher. In turn, they're not purchasing, but you know who is purchasing in droves and continuing to purchase is the Black Rocks, the Vanguards, the corporate property companies. So if anything, if you listening get anything out of this, it should be to let's band together, jump on the bandwagon of becoming a homeowner before they continue to take advantage of the situation. And the
Yeah,
situation being your mindset of what you believe rates are going to do and how it affects you long term becoming a homeowner.
yeah. Yeah, the whole thing about becoming a homeowner, there's just so many benefits to that. There really are. You have a house that has 4 bedrooms, 2 baths, and you only need 2 of those, then get one of your buddies to rent out a room.
Mhm.
Is that
None of us are
ideal when
crazy.
you're recently married? Pff, no, but if they're paying an extra 3 or $400, it gets them out of their mom's basement, and
Yeah,
it
and it
helps
works.
pad your pocket a little bit. So,
Great point.
I think everybody just needs to think broader. Like, that $2,000 mortgage payment is all on you. It is. It's your responsibility. But let somebody come tinker in your garage and cost them $100 to change their oil once a month.
There
Like,
you go.
think broad. Think what you can do. Like,
Yeah.
there's so many little things. And, you know, your wife is staying at home, a stay-at-home mom, you have your own house, then she can watch a couple kids during the day and pick up a couple
Another
hundred
good
bucks.
idea. Yeah.
Because you've got people who are in the corporate world, and there are women and men who do not wanna stay home and raise their kids. They
Mhm.
just wanna be in the workforce, and that's their choice. Well, they need some help for their kids because they want to have that. There's just instead of being so scared of that 2,000 mortgage payment, just think, "Alright, if I get a house, then here's all my opportunities that go into that."
Yeah. No, I don't disagree with you. Just looking at all the facts, I'm not liking how the future is going to end up potentially panning out for those Americans that don't currently own a home right now. I know that as a current homeowner, I will continue to own property, real estate, and continue to put my money where my mouth is by buying more.
Yeah.
I don't want to speak for you, but I can imagine that. I mean, we started the call with you just purchased a home for your son. So you obviously think that real estate's a pretty safe bet, at least for the next 30 years.
Yeah. Well, my dad, and I think it's probably a terrible thing, but he says, you know, if the world does crumble, there's not going to be enough manpower to come repo all of our houses. So we might as well just own as many as we can. The banks, the people who are at the bank that are going to come repo, they're probably going to hunker down in their own houses too and not come steal yours. So you probably are okay.
You're gonna be all
Okay.
right. That's right. Yeah, no, that's good stuff. Yeah, I hope the people got something out of this. And as I mentioned before, and I think the title of this should probably be the that statement that I said, which was don't wait to buy real estate, and then wait.
Yeah.
I mean,
Let it do its natural.
yes.
Yeah, yeah, and don't get hung up on Zillow. When can you imagine when the big crash happened in '08 and the big cities that were hit the most, Vegas, LA, Phoenix, you know, those big cities just
Yeah,
died overnight. They just died overnight in values. Those little houses that were worth 500,000 that all of a sudden plummeted to 250, they're $1,000,000 houses now.
it's true.
So if the homeowner would have thought, "Oh my gosh, my house is worth 500, I gotta bail now because it's gonna bottom out at 250." If they'd have just hunkered down and stayed there, they just
Mhm.
tripled their value. So
That's right.
just chillax. If it does go down, then just go buy a gallon of milk and have some cereal for dinner. Like, it's
There
really
you
you're
go.
fine. You're fine.
I love that logic. Like we said, we come from the school of hard knocks, and it's just very, very sophisticated logic.
Yeah. I have a degree. I went to ChatGPT and created myself an award about my education.
Bravo. That's
Just
awesome.
kidding,
That
just
is
kidding.
awesome. Well, guys, again, we're back doing these hopefully weekly, but every time they'll be jam packed with some value.
Yeah, absolutely, and go buy a house. If you're on the fence, if you're listening to this, consult with a mortgage professional, brainstorm with a mortgage professional, just get it done.
That's right. Matter of fact, I'm going to put our links down below in the description. So if you are looking in the United States, either myself or Deborah are licensed in one of those states, or we have a branch that is licensed in those branches or
We
in those
have
states.
friends everywhere.
Yeah.
Yeah.
We got friends in low and high places.
True, true, true.
All right, guys, have a great week, and we'll see you on the next one.
Okay, see ya.